Hi, everyone. My name is Boris Revsin, co-host of the Blockchain Brief. Every episode, we interview innovators and executives in the blockchain and crypto space. Today, I am excited to have Murad, a cryptocurrency analyst and an angel investor. Murad, great to have you on the Blockchain Brief.
Thanks for the invite, Boris.
Great. So let's jump right in. Why don't you introduce yourself and just give a quick background on what brought you into Bitcoin, when, and why?
So my name is Murad Mahmudov. I'm originally from Azerbaijan. Came to America for college and did a semester abroad in China during the previous Bitcoin bubble. So like between 2013, 2014. So that's when I sort of first got exposure. Some of my American friends in Beijing were essentially trading Bitcoin like peer-to-peer or over the counter, if I may. There was a lot of demand coming from China like during those years and not a lot of liquidity yet on major Chinese exchanges. So they could literally make money essentially bringing Bitcoin into China and like selling it at a slight markup. So I was like part of that small community of both like foreigners and the Chinese people sort of involved in Bitcoin back then, sort of winter 2013, 2014. And essentially been in the rabbit hole ever since. Was relatively early to Ethereum, and sort of been as months went by, sort of been delving deeper and deeper into the space. And like essentially these days, it's all I can think about and all I want to talk about. So here we are, yeah.
And did you have any experience in distributed networks or technology before you got into Bitcoin, or was this your first foray into it and then you got real deep?
So I personally come more from sort of the investments and trading space. And my sort of, there's so many different disciplines that cryptocurrencies and blockchain technology weave together. But the most favorite for me are probably sort of monetary theory and monetary economics, monetary histories, things like that.
Yeah. So what do you do day to day? Your Twitter handle calls you a cryptocurrency analyst and an angel investor. So I imagine that you put your money where your mouth is. Where are you putting your money?
So I run a small investment vehicle with a handful of investors, and mostly invest in liquid cryptocurrencies as well as some startups sort of adjacent to the blockchain space as well. My personal view, and like sort of this is me sort of jumping into my general sort of view on the space, is that blockchain technology, quote unquote, I believe is extremely overhyped. However, it's one use case, which is the reinvention of money, in my view, is very underhyped. And I think that there may or may not be like a handful of legitimate use cases of this technology. And I think that distributed ledgers will prove to be useful sort of in the medium to long term. But I think all of the use cases pale in comparison to sort of the reinvention of money, or like neo gold, so to speak. And both from the total addressable market, as well as from the perspective of returns to us as investors, as well as sort of potential for socio-economic change, if I may.
And so that's an interesting thesis, because your Twitter handle also says Bitcoin, not blockchain, and you've sort of explained why you think that. There are a number of currencies, whether they call themselves coins or tokens or currency, that are trying to subsume what Bitcoin does, and they're attacking it from various angles, maybe throughput, branding, marketing, more decentralized, less decentralized. Do you believe that there is space for more than one of these neo golds, or is Bitcoin it, and why are we even creating new ones at this point?
I used to think that there will be sort of 3 or 4 winners, and it will be winner take most, sort of in a power law fashion. But as I sort of delve deeper and deeper into both Bitcoin itself as well as historical precedents, I increasingly believe that it's going to be essentially almost winner take all, with the number one winner taking 90 or 95% of the market.
And do you think at this point in time, Bitcoin is positioned to be that 95% winner?
I think it's hard to say for sure. And the best we can do is approach sort of investing at least probabilistically. I think as of today, Bitcoin is most likely, but that's not to say that it's completely indestructible. But if you look at a variety of metrics, like hash power, liquidity, market size, like security, credibility of monetary policy, and like dozens and dozens of others, Bitcoin is number one. I do think it is the prime candidate, but there are a handful of other coins that I sort of pay attention to. But I do think that Bitcoin is most likely to win, though I have a couple of adjacent theses on the space as well.
And in terms of Bitcoin being most likely to win, or whoever is the ultimate winner, does that mean that the price of the token or the coin should appreciate from where it currently is at the point at which they own 95% of the market? Or do you think the entire market is so incredibly overhyped that $5,000 per Bitcoin might actually be a phenomenal price in the long term, given that it started so low and everything else goes virtually to zero?
Well, the total addressable for market for money is close to $100 trillion. And this is, so fiat currencies are like 88 to 90 trillion. And gold is 7 to 8 trillion. And some people believe that right now, a lot of real estate as well as equity and even debt is overvalued beyond their intrinsic value, because if people, and especially sort of the high net worth individuals, are using sort of real estate in cities like London, Tokyo, New York, etc., as a store of value beyond its like intrinsic return that you would expect it to be valued at based off of cash flows or rent, etc., because they simply need to park their wealth somewhere. So the eventual market cap, like, and I'm saying this in 2018 dollar terms, but the eventual market cap for the cryptocurrency winner, let's say Bitcoin, could be somewhere between 10 and 200 trillion. And I know this sounds absolutely absurd at first glance, but let's delve into this a little bit. I actually think that because like even the best fiat currency in the world, which is the US dollar, is getting, its supply is getting expanded at 6.2% per year on average over the last 10 years. And this is the best currencies. Other currencies are even worse. So essentially, because of this sort of printing, it incentivizes, it changes the nature of fiat currency to be a worse store of value, as by the very nature of supply expansion, central banks and commercial banks are forcing us to either spend or invest or consume, or it essentially is turning this asset class into like a hot potato, and like people are unwilling to park essentially beyond a certain amount of wealth in fiat currency because it's guaranteed to lose its purchasing power year after year after year. So let's say the US dollar, the supply is getting expanded by 6.2% per year. And you also have sort of the deflationary nature of technology and capitalism at work. And let's say net to net, you lose 2 to 3% in your purchasing power per year. Now, in Bitcoin, theoretically, this could be different. At equilibrium, people believe that Bitcoin's purchasing power would increase it. Instead of losing 3% purchasing power per year, you would essentially be gaining 3% purchasing power per year. because the supply is fixed. And while the supply of money is fixed, the economy would like keep growing, productivity would keep growing. So the purchasing power of Bitcoin would keep improving by 2 to 3% per year. So essentially, if the US dollar is losing 3% purchasing power per year and Bitcoin is gaining 3% purchasing power per year, in a way, like in a very like rough analogy, Bitcoin is 6% better per year than US dollars. So if like people like the total stock of fiat currency is like 90 trillion, and that's given that the fact that it has this like hot potato nature, which you constantly like, it has this working capital nature, you're always trying to get rid of it instead of something that you want to keep for years on end, like other assets that like don't decay. And so like the more extreme sort of fraction of Bitcoin maximalists, if I may, believe that in the long term, the marginal propensity to hold of Bitcoin could be so strong because one day like right now, it's one of the riskiest assets, but eventually if it does become global money, it could be some of the safest assets in the world. And if it's the safest and the most liquid and the most uncensorable and uninflatable asset in the world, then its market cap could theoretically be much bigger than 90 trillion. So as I've said, the total addressable market here is somewhere between 10 and 200 trillion. Some will fall somewhere between there.
So let's unpack this a little bit more and think through what would happen if Bitcoin started to not only beat out the competing protocols even more severely than it is now, but let's say it's that ultimate winner and starting to approach 2 trillion, 3 trillion, 5 trillion, 10 trillion. What does that do to global markets? I mean, there's clearly downsides to slowly inflating currencies. Are there downsides to slowly deflating currencies that you have thought about?
So naturally, a more disinflationary currency would incentivize more savings, and it would incentivize more long-term capital investments. And essentially, people would only invest if they think their returns would likely exceed the 3% that they would get off of Bitcoin for doing nothing. And there is an ongoing debate whether that's good or not. Sort of the Austrian economists think that the current sort of meddling in interest rates and constant printing by central banks causes a lot of malinvestment, which is to say that a lot of investments these days go into sort of weak businesses or silly startups or just like stupid things, as well as general overconsumption that people are like buying like plastic things that 30 minutes later they just don't need anymore. And in a more sound money environment, they would essentially save, and they would take longer term view, both with regards to their capital, but also with regards to their whole life, because this this different nature of money would essentially push down on their time preferences. And people believe that it would make people sort of think about 5 years from now rather than next week or even tomorrow, as a lot of people think today. And it would incentivize people to engage in more longer term projects. And instead of sort of consuming here and right now, as famously described by the marshmallow experiment, you would essentially plan for the future. So I'm pretty sure you know the famous marshmallow experiment where the children are either given 1 marshmallow right now or say 2 marshmallows a week from now. And like there's been a lot of studies that show that people who are able to delay their gratification are able to achieve a lot more in different aspects of life. Now, by printing money, essentially in the marshmallow test of money, central banks, instead of giving you 1 marshmallow right now and 2 marshmallows later, what they're doing is very roughly either offering you a marshmallow right now or half a marshmallow later. And essentially you are forced to spend money, or like on the margin, you're much more likely to just spend and get rid of it as fast as you can. Now, Keynesian economists and monetarist economists believe that like this is good because like it keeps the money flowing. But I believe that this is a little short-termist, and I believe actually a little bit controversially is that like throughout 20th century, the government has been promoting these ideas, namely that the state needs to have a monopoly on money, money supply, money creation, money transmission. And if effectively, they have been promoting sort of Keynesian thinkers into the highest echelons of academia to make it so that this is sort of the status quo of academic thinking. And deliberately sort of Austrian economists and free market thinkers, especially like free market thinkers with respect to monetary instruments, they've essentially been pushed aside and essentially like silenced, while the government itself has a lot of benefits from like prominent economists promoting the ideas that benefit them. However, I believe that, and millennia of history shows this, I mean, fiat currency is only 42 years old or 46 years old or something. For thousands of years, we have had money that is naturally emergent. It's not top-down decreed, but rather emergent bottom-up. And I believe that money is supposed to be a creature of the market, not a creature of the state. And Bitcoin is essentially, in a very rough metaphor, it's the gold standard. It's the neo-gold standard, but it's even better than gold. It's more divisible than gold. It's more transferable than gold. You can send it across the world in 10, 20 minutes, which is something you can do with a gold bar. Faster settlement, more uncensorable, more unseizable, more private, etc., etc., etc. So it's essentially a gold standard that's stricter, better, and even more uninflatable, because gold's supply is growing at a rough rate of 1.5 to 1.6% per year, while eventually Bitcoin would just converge to zero.
So that's super interesting thought. And I think my personal view is that there's probably some room for equilibrium. Obviously, being in cryptocurrency, I believe in the power of Bitcoin. I've written quite a bit how, ultimately Bitcoin is my stable coin. I don't know if I need any others. I do think that the history of money, and there's obviously different views in this, but ultimately there might be room for some sort of consortium that helps think through economic policy that I don't know if I want to leave just to chance in this like prescribed vision that Satoshi had, let's say, or now has been sort of like evolved on the vision that Satoshi had of this one, fully divisible, unseizable currency. Because there's some problems with it too. And so I'm curious, one of the things that I found interesting when I was doing research, I don't know, a while ago on like the underground forums on Reddit, I saw this story, and I'm sure you've seen it, like the Citadel story on Reddit, where this guy wrote this pretty fascinating novel almost of how all of the early adopters of Bitcoin basically built cities. Maybe there's some allegory to what's happening in Puerto Rico. And because they were able to accumulate so much Bitcoin early on in the game, they were basically the kings in their little fiefdoms. I know that's probably going too far, but is there a version of 5, 10, 15 years down the road where there's just not a very even distribution of Bitcoin? And does that matter?
So a more equitable distribution helps in the adoption of money. However, the point of Bitcoin was never to create wealth. It was never to solve wealth inequality, but rather it was when you earn your Bitcoin through labor and say you receive a monthly salary in Bitcoin. The value proposition here is that you can put your savings in that asset at equilibrium and nobody can print more. So the point of Bitcoin isn't to like make everybody equal or anything like that, but rather to make sure that once you have, even if it's just a little bit, whatever you do have, you know that you have it. And if anything, instead of depreciating, it would slowly appreciate. and it would be like the ultimate, essentially the ultimate savings mechanism, the ultimate savings vehicle. Now, in terms of distribution, yes, the early adopters of Bitcoin are already incredibly wealthy people, and they have essentially 100x or 200x more to go. However, with every bull cycle, and I believe there will be 3 or 4 more at least, like before Bitcoin succeeds, if it does, I believe that if like with every sort of level of appreciation, the so-called Bitcoin whales, they will be selling some. A, for the purposes of taking profits, 2, for the purposes of diversification, and 3, for the like they've already captured so much gains that the higher it goes, the less there are the less strong there are disincentives to spend. So Austrian thinkers believe that sort of with every wave of appreciation, whales would essentially sell chunks of their Bitcoin on the market. And with each wave, with each sort of speculative boom and bust, the distribution of Bitcoin would gradually improve. Now, I also want to mention that Bitcoin has the best Gini distribution of all coins right now. Everything else is even worse. Now, going back to your previous point is, you said you don't want a coin that's fixed supply, and this like strict fixed supply is chosen by chance. However, I don't agree that it would be by chance. If the market decides that Bitcoin goes to $10 trillion market cap in 2018 like in today's dollar terms, then it's not by chance. Then that's because of human action and human desire, and that's because humans collectively naturally come to a convergent consensus, global consensus, that fixed supply is actually something that they want. So it's not by chance. Satoshi essentially gave us an offer. Like, look, guys, I'm giving you something that's fixed. If you like it, you can buy it. If you like it, you can store wealth here. But if you don't like it, you can go somewhere else. And the very fact that Bitcoin went from being worth like 0.0001 cent to $6,000 right now is a testament to slow but consistent monetization of Bitcoin. Because when gold, like, and this is what I like to say to people who talk about Bitcoin's volatility, when gold was first found by people, it wasn't price stable either. It took centuries, if not millennia, of and generations of civilizations for gold to achieve this sort of rough equilibrium where it's monetized as global money. And I believe that Bitcoin is undergoing sort of a similar monetization right now. And because of regulatory uncertainty, because of competitive uncertainty, like even the smartest of people are still unsure whether Bitcoin is going to be the eventual winner. And most importantly, because of like the overall small size, like 100 billion, which is Bitcoin's market cap right now, is nothing compared to 100 trillion. So sort of this volatility, like Bitcoin's price is the same as the median subconscious psychosocial value, subjective value that people ascribe to Bitcoin. And there's a lot of uncertainties, and there's a lot of paradigm shifts and paradigm changes, regime changes going on in this market. So that's why it's extremely volatile.
I think that's a very good description of gold. I also I do agree with the view that this is a market-driven result. I think my hesitation comes from the outcome of herd mentality versus putting together some of the smartest people in the room, perhaps elected people, and having them help shape that future. I'm not saying I fall in either camp, but I can understand arguments from both sides. And I do think that the invention of all these different derivatives that have helped this free flow of money, and this concept that you brought up earlier was we're buying a lot of shit we don't need. That is definitely an argument in your favor. But this idea of investing in startups we don't need, I think, is more tenuous, because without trying stuff, right, like without Elon Musk getting the money to build a PayPal or build, SpaceX, without obvious capitalistic outcome, I think is more challenging for me to get behind. But I generally speaking understand what you're saying. And I do think we've become way too consumerist, even if you look at it from like a pure environmentalist mindset, which is like, we can't just buy shit forever and scale that exponentially. So this has been awesome. I want to move on to one other thing you mentioned at the very beginning of this conversation, which is you seem to think there's some other coins worth watching. Are you willing to share what those might be?
I really like privacy coins, and in particular, I'm a big fan of Zcash.
And Zcash, for those that don't know, in some ways basically scrambles who's on both sides of counterparty so that I guess you could say the government or the state couldn't necessarily find out who's sending or receiving the coins. Is that right?
Yeah. And even if you're not necessarily trying to evade government, I think that like sometimes you don't even want your neighbor to like know how much money you have or how much money you're spending. The problem with essentially on-chain Bitcoin transactions right now is the fact that like if you go to Starbucks and like Starbucks receives a payment for you like in the store, and like they see who you are and they like link your identity to like your address or whatever, then it is possible for them and especially for like machine learning blockchain analysis companies like Chain Analysis or Elliptic to essentially link like your payments to others and link your addresses to others. And they can theoretically even go as far as to figure out where you spend your money, what your salary is, like who your parents are, who your brother is, who your sister is, like what kind of consumer behavior you have, et cetera, et cetera, et cetera, which is now, as I've said, like I consider myself like a mild Bitcoin maximalist, and it is by far my biggest chunk of my portfolio. And I think that it's the coin that's most likely to win. And it has many sort of privacy developments in sort of the pipeline as well. But some people believe that a transparent blockchain is a totalitarian technology. And I would much rather live in a world where there is mathematically guaranteed complete privacy. That's why I also sort of have a small allocation of my portfolio to Zcash and a little bit Monero as well.
Got it. And so in terms of other coins that you're looking at, it sounds like Bitcoin, privacy coins. You didn't mention Ethereum, which must have been on purpose. Do you see Ethereum as plagued by problems that Bitcoin doesn't have, or has it just not proven itself to you to be a good competitor quite yet?
So Ethereum is interesting technology, and like dApps are cool, but I don't think that Ethereum has a chance to be as great of a store of value as Bitcoin, or even a privacy coin for that matter. And this is the way I think. Now, there are generally like 3 or 4 theories sort of floating around the market and the community right now of how value accrues to cryptocurrency. Now, sort of the Bitcoin thesis is essentially this progress from collectible with good store of value qualities, evolving into a store of value, then evolving into a medium of exchange, because there's bigger size, bigger liquidity, bigger stability, and less disincentive to spend. And then like once it's really, really big, it can be a unit of account. And that's sort of the Bitcoin thesis. Then there is sort of the medium of exchange, payments, utility thesis, which states that like something which is good as medium of exchange, and then for payments and for utilities, for dApps, it can then become a store of value, etc. And that's sort of more of like Ethereum, Bitcoin Cash, thing like that's sort of that camp. There's also sort of the stability hypothesis, and that's like a lot of people building stablecoins believe that for something to be used as a medium of exchange, it like needs to be stable, and like I kind of see that point as well. People don't want to use something that's very volatile as their day-to-day money.
Mm-hmm.
And I think that Like in the long run, I'm bullish on Bitcoin and Zcash. And in the short term, I think there might be a space for like stable coins to be useful as well. Because somebody in Venezuela or somebody in Africa, in Southeast Asia, in South America, they don't want to use Bitcoin right now, at least, because if they park their wealth there in January, then they would have lost 70% of their wealth. Stablecoins are essentially like a synthetic dollar that makes capital controls collapse. And it's essentially ones and zeros that can get in and out of countries, which I think is going to lead to some interesting dynamics.
Yeah. Wow. Well, listen, Murad, this has been one of my favorite conversations on the Blockchain Brief. I think you've introduced to our audience some deeper level ways of thinking, including some first principles as well. We're going to have to do a part 2 because I want to ask you about FedCoin. I want to ask you about China and how Bitcoin, at the very least, might be some level of censorship resistance to the billions of people that live in countries that don't have a choice of relatively stable fiat, among a number of different questions. But for the moment, where can people find you online to hear more of what you're thinking?
Yeah, you can. I spend most of my time on Twitter at muststopmurad, which is MUSTSTOPMURAD.
Awesome. Well, I encourage everyone listening and who's gotten this far through to follow Murad for more pretty awesome thoughts. Thank you so much for coming on the Blockchain Brief.
For sure, man. Thanks for the invite.